Hello, I'm John Kreitler. Welcome to This Week in the Markets. On Wednesday, the Bureau of Labor Statistics released its CPI, Consumer Price Index. On a month-over-month basis, July to August, inflation increased both in core and headline. On an annualized basis, the core is at 4.3% annualized, and headline is at 3.6% annualized. It's going to get more difficult for inflation to get down to 2%. One, because of economic conditions right now, but also what is called the base effects. Remember, June 2022 was the peak of inflation in and around 9%. Ever since, it's been coming down. Therefore, on a year-over-year basis, it's going to be difficult for the comparisons to bring it down to 2% on a core and headline number. For its part, the bond market stayed in the upper part of its range, with the 2-year at around 5% and the 10-year at 4.3%, again inverted. Stock market indexes plumbed around its 50-day moving average, pulling back after Jackson Hole and staying in a volatile range. All eyes will be on the Federal Reserve meeting next Tuesday and Wednesday. The one thing I'll be looking at is what's called the Summary of Economic Projections, the dot plots. Last released in June, the dot plots in June dissuaded the markets of thinking that there were going to be any rate cuts this year. The question remains to me, will the dot plot revision next week dissuade the markets thinking that there'll be any rate cuts at all in 2024? All eyes will be on Jay Powell and his press conference next Wednesday. Thank you again for watching This Week in the Markets. I'm John Kreitler. Have a great week.